B2B Cambodia, the portal for business use in Cambodia.
This is Anthony Galliano for B2B Cambodia with a new segment show called Tax Talk. We're going to talk about tax in Cambodia. Today in the studio, I have one of the market's top tax experts who works very passionately on tax with Working Group D and obviously for his company. We have Lucas Moro rolling with us today in the studio, and we're going to talk about tax. First, I'd like to just mention that we're both on Working Group D. Working Group D is a public-private sector forum where the private sector raises issues, tax issues, and they're discussed within a tax working group and then brought to the GDT and ultimately the Ministry of Economy and Finance if necessary. So can you talk about your experience on Working Group D and how that works and the mechanism itself and how you find value in it?
Working Group D is one of the many working groups we have in Cambodia where they work with the government and we bring issues that we may see. Now, Working Group D focuses specifically on law, taxation, governance. And it's bringing together the different chambers of commerce we have across Cambodia, the different business representatives, to focus specifically on the main tax issues which we may be seeing within the business community. And it works really well where we can bring issues together and they can go through directly to the General Department of Taxation, through the tax working group, and they may even go all the way to the Prime Minister through the government private sector forums that we have every year. And so this is a really great way that us in the business community can see progress. In Cambodia, we can see development, and we can also bring issues, bring concerns to the attention of the government as we need to. And so it's a great way to bring together the different perspectives we see in Cambodia and having a positive outcome for the business community.
So I want to say the Working Group D is a credit to the royal government. It's definitely a credit to also the General Department of Taxation and the Ministry of Economy and Finance. There's not every country in the world that opens up their ears to listen to the private sector and allow them to speak their piece on issues that are affecting their industries or generally affecting the market. These are pretty intensive meetings that are in great detail and cases presented to the General Department of Taxation for consideration. And a lot of these cases are solved through this forum. Some of them do have to be escalated. Some of them do have to be escalated to the Ministry of Economy and Finance, and ultimately maybe the Prime Minister does get involved. But again, credit to the royal government and the GDT for listening, which is very important because sometimes policy is just set. And then maybe there's a long legislative process to get through this. In our Western countries, for instance, changing the tax code is a monumental effort. So these results can be quite quick, or they can take time to get there, but it's done through these forums where when the GDT listens and they accept, let's say, for consideration what we're asking, then it goes to practice, it goes to law, and it doesn't have to go through a long process to get there. I'd like to start talking about what would be some of the issues that have been solved. So that I'll start on a good note. And I know I'm going to talk about one that's been sort of solved and unsolved and solved and unsolved over the years. But one that particularly I see during my 16 years of doing audits, a very favorite reassessment that's made by auditors over the years, which is shareholder loans. Shareholder loans are, just for our audience, are when shareholders in a company, rather than putting in additional equity capital, lend the company money. So the shareholders themselves will lend money to the company. And because of Cambodia's really low capital requirement, which is only on the books $1,000, but over the years, especially when companies were incorporated 10 or 15 or 20 years ago at $1,000, and if these companies needed capital, shareholder loans was the way to do it. And that had a little bit to do with also how increases of capital are a little complicated here because every shareholder has to sign the articles again and has to go through the MLC and GDT. So it's not easy just to increase the capital. So shareholder loans was a very easy way of injecting capital. And over the years, there's been a requirement either that they should have an interest rate, and then they shouldn't have an interest rate, and then they should have an interest rate. So the interest rate basically is at times was decided it should be a market rate, So at least there should be some sort of transfer pricing where there should be arm's length. So if the shareholder lends money, it should be at a market rate, so it's just not for free. And then at times the law has said you can have interest-free loans. Now it's been resolved, I think the last time, that you can have interest-free loans.
Correct.
Provided that, and I'm going to shoot over to you. What do you need to have shareholder loans?
Yeah, so this is really, it has been a constantly evolving process. I think we have seen a lot of changes, but I think generally this has been with consultation with the private sector and the tax department is saying, okay, how to make this work for businesses in Cambodia? How do we make sure this can be an appropriate mechanism? And again, there is now the ability to have mutually agreed shareholder loans. There's no minimum interest rate anymore. There is a maximum up to the average of the 5 major banks in Cambodia, which for 2024 was about 8.7% for USD loans, 9.67% for Khmer Real loans. So it's still in a reasonable range where you can enter in a reasonable shareholder arrangement. And there are a few requirements. You do need to make sure you have documented resolutions of your board of directors. You do need to make sure you have a business plan of some sort and a loan agreement. And I think this would be, we talk about tax throughout here. The most important takeaway for a lot of your tax issues is just make sure your decisions you made are well documented.
But you can still have interest-free loans at the moment, is that correct?
Yes, correct. Yes, exactly.
Right.
Yeah, so it's mutually agreed.
You don't have to have a market rate. You could have.
I'm sorry. So make sure I was saying clearly is it can be up to as high as the rate. And actually, a really important development I think for me is there's an exclusion for short-term advances because sometimes you start up a business, you just need to get cash in there. Anything under 12 months with a short-term arrangement which is repaid by the end of the year would be exempt from these criteria.
And I think the cash advance one is a little tricky. So basically the law says if you have a cash advance, provided it's under a year, you could do it at 0%. And then it says provided it's repaid within a year. So the question is, how do you know at the time if it's going to be repaid? So if let's say you're doing it 6 months, and it looks like it's going to be repaid from June to December, and all sailing well. And then comes around June next year, you say, wow, I don't have the money, but I thought I was going to repay it. And then it gets reassessed, which is a little challenging. So I think there needs to be a little bit more clarity on cash advances that either if you expect them to be repaid, then that's fine. But if it says it has to be repaid, then you can't really predict the future 12 months out whether you have the funds.
Yeah, I may get repetitive, but it all comes down to documentation. So again, in a case where you have a loan agreement, you have this basic business plan. We say, okay, we need these funds to purchase these goods. Some simple documentation. We have an approval of the board of directors. Then you can start setting in place your arrangements. But often short-term loans, we need money quickly. You don't have time to develop all those business plan. You don't have time to develop all those criteria. And so what you can do is get the short-term loan in quickly, get the funds you need to do the operation, to buy the stock you need, to manage the cash flow you need in the short-term arrangements. Now, if you get to pay it back, great, you can move on with your day. But if you do find that you need to delay this a bit longer, then you have time to prepare the documentation, to prepare the processes as well.
Working Group D is currently working on a number of issues. We're both involved. You more than I do, so give you credit for it's an investment of time and energy to do this. In the markets where there are capital markets, I would say, that eventually list or are listed companies, usually have a very low par value. I mean, Amazon and Apple, for instance, their par value is pennies, if not even pennies. Correct. Right? So the par value is stated less than a penny. And the reason for that is the par value is not reflective of the actual value of the stock. And that's common for in Western countries where the par value is understated. Not like bonds. Bonds' par value is very critical because that's effectively what will be paid back. But for stocks, par value is typically overseas out of Cambodia is pennies, if not less than pennies. And the premium itself then, really for the amount invested. So if somebody invests, let's say $100, maybe the par value is a penny and the premium is $99.99. So this is typical of how premiums work in markets. Now, in Cambodia, the tax department is basically saying that the premium should be taxed. Correct. If an investor buys that $100, they should be taxed on the $99.99 because that's effectively a gain. Is that correct?
Correct. Yeah. And again, this is where we work closely with the working group. We bring issues that we may see with our members, our partners may find these issues, and really we're just trying to explain and emphasize that, okay, these cases here.
What is the tax department's position on that? I'm not asking you what your position is. I'm asking you what the tax department's position is, so we could better understand it.
Well, that's it. So there is sometimes an inconsistency, and this is often what we have. We've seen some really positive development where some really good regulations have come out, some really good interpretations have come out, but we also want to make sure they're consistently applied. And I think we do see some cases share premium is accepted as a capital injection. In other cases, it's being interpreted as being as a taxable transaction. And what we say is, okay, in these cases here, they are standard capital injections and they should not be subject to tax. They should be treated as a capital commitment, as you've described, general business transaction. So these are issues we'll work with the tax department, work with the private sector group, and bring these issues to the attention.
And I have to say the tax departments have invested a lot of time with Working Group D to discuss this issue, and it seems it's very close to resolution. So this is great for the market when both the private and public sector have these discussions, exactly. and eventually we have something that's a resolution which is acceptable to the market, and it has to be acceptable investment. This will come into play even more as companies list. So if we're going to focus on our capital markets, we need to also resolve this for the eventual, I hope what will be a big launch of the capital markets with a lot of listings.